How you doing, folks? Today's November 23rd, 2011, the day before Thanksgiving. I wanted to start off by wishing you a happy Thanksgiving, a happy holidays. I hope whatever you're doing, you enjoy, and you have some time off to spend with your family and your loved ones. And really, that is what it's all about. I know our topics here are about trading, money, making more of it, but in the end, we're doing it all so that we can spend more time with our families and giving back and helping those less fortunate. So I hope you get a chance this holiday season to think about these topics, to look back and look at the year and say, hey, I did these things good this year and I can improve on these things for next year, and then make a plan and actually do that. So we can make life better for everybody. I also wanted to give thanks to you individually for watching this video and for being on our email list and for sharing, giving your time to me to try to learn and to listen to me. I know I can ramble on. I'm not a professional, and I say a lot of ums and ahs and and all that. I'm trying to get better at it, and I believe since I started doing the videos, the ums and ahs have gone down considerably. And there's still a bunch there, so we're working on that. I'm working on that personally to just say what I want to say and not stumble so much. But so I wanted to thank you for that, and let's go ahead and get into our video. This is a chart of McDonald's that you see on the screen. McDonald's was a trade that I put on in the last video as a butterfly, and this is what the butterfly looked like at the time. McDonald's was somewhere around the $95 mark, and so the butterfly was centered at that point. Since then, McDonald's has gone down, and because of that, I had to go ahead and add the second butterfly. So I went ahead and added this butterfly here, which is a put butterfly. It's very same as this, 5-point spreads, 5-point wings, +2, -4, +2, so it's the same size, it's just doubled. And the strikes it was at the 90 strike with 95 and 85 as the wings. So I added this butterfly to it, and you can see the price that it was added to. This is how much it cost me to debit to do this one. The original price was $225, and now this is what our chart looks like. Right now, McDonald's is trading at $92.30. This trade is negative a little bit. It's down $74, $75 right now, but as you can see, it is perfectly centered. There's one break even right there, one break even right there. It's perfectly break even, as you can see from our our black line. This is the T+0 line. That if McDonald's just stays in this range for a little bit longer, the trade will be back in the positive. And let's see how long it takes. Okay, so that's roughly around right there. That's about the 3rd of December. We'll be back in about even if McDonald's stays where it is and volatility does not change at all. So about a week left, and then the time decay will really kick in there. So that's Johnson & Johnson didn't have to do much except add the second butterfly, and I did that when it got close to the break even. As you can tell right now, that's right where the price is right now, and that's right where the break even is. So I did add this a little bit early, and McDonald's did rally yesterday, and it is down a little bit today. So that's what we have right now. It's perfectly centered. The other trade was Johnson & Johnson Butterfly, and this was the original trade. Johnson & Johnson was around 64, 65 when we put the trade on. Currently, Johnson & Johnson is now at 62.29, so it broke out of the break-even, went below the break-even. So what I did was I added a put butterfly. I put it at the 62.5 strike, and then I added the 57.5 and the 67.5 as the wings. So now this is what our butterfly looks like. This is one break even. This is the other break even. The downside break even's at 61.51. Right now the stock's at 62.29, so we still have about $1 on this side, and if Johnson Johnson continues, and if it moves a little bit closer to the break even, I'm not going to wait for this break even, because as you can see from our black line, we're losing money pretty quickly because of the slope. The slope is pretty bad here. So if we had a slope like this, you wouldn't have to worry about it because you're not making or losing much. But from here to here, the slope is pretty bad. So I'm going to go ahead and take off the original call butterfly, which was the 65, 70, 60. Or the 70, 65, 60, however you want to say it, butterfly that I had put on in the call side. So I would just go ahead and sell that, take it off, and then I would have just one butterfly, and Johnson Johnson would be centered again. So that's what the next adjustment would be. We already adjusted it once. That was the next adjustment. We still have about 23 days left in the trade. With the holidays coming up, we do get a few extra days of time decay, which is wonderful. And this whole week has been down, and there's a lot of headlines about Europe and this and that. But normally the week before or the week of Thanksgiving is a low volume week. The market usually goes up in one direction, or it either goes up or goes down. This year it went down, and can't really read too much into it. We'll see what happens when everybody gets back, all the traders, all the hedge funds, all the mutual funds, everybody gets back on Monday. So we'll see on Monday and Tuesday how the market's going to react and what direction it's going to go. We might have somewhat of a rally since we had a down week this week. So I'm just holding off on this one. We'll do it if it continues down lower, and then we'll just turn it back into a single butterfly, and that single butterfly will reduce my position, reduce my risk, and then if I feel that it's going to keep going down and if it's not going to stabilize, then I'll just exit the trade, because this trade is already down a little bit of money and I don't want to lose much more. So the other option would be to buy a put or buy a call, depending on which direction it's going to go. But for now, I'm already down a little bit of money, and I just want to get out. So if it doesn't cooperate, this is the final adjustment that I would do. And then I would give it a couple more days to see what was going on. And if it kept going down, then I just get out. But hopefully, Monday, Tuesday, it's going to rally back up and it's going to come back into our range here. So if it's around $64, I'm happy. I'm a happy camper. There's still plenty of money to be made in this trade. If it does rally, we'll get our loss back pretty quickly. The final thing I wanted to talk about is, a lot of people say that if you think a stock is going down or if it's going up in one direction, you know what it's going to do exactly. The best thing to do is either buy a straight put or a straight call. In today's members only video, what I'm going to be talking about is a trade that I put on in Exxon. I have a belief that Exxon is going to go to 70. And when I put the trade on, it was around a little bit higher than that. It was about 78. So I feel the trade is going to 70. I did a very cheap, very inexpensive speculative trade on Exxon to go down to 70. And in the members only video, I'm going to show you how that cheap trade was a lot better than buying a straight put. It was very low risk. Actually $32 of risk, and I can actually make multiples of that if Exxon does hit what I'm thinking it's going to hit. And even if it doesn't, even if it goes down a little bit, if I'm right on the direction, the trade will still be positive and make a nice gain. So that's what I'm covering in the members only video. Again, happy Thanksgiving. Thanks for taking the time out to spend with me. If you have any questions, as always, please feel free to email us, and I will try to get back to you as soon as possible. Have a good day. Have a good weekend. Have a good end of the year, and talk to you soon.